folks, and welcome into today's video. First off, thank you for joining me. As always, appreciate you guys being here. Today, we're going to talk about the state of the stock market. We're going to talk about how the stock market's in sleepy mode right now. Yes, you heard me right. It is asleep right now, okay? We're going to talk about some gamma squeezes coming. We're going to kind of explain what the situation is coming. We're going to talk about volatility in general, kind of how you should view this and things like that, what this means for stocks, what it means for the stock market, how I think about all this. So we're going to get into some more in-depth subjects that we don't a lot of times cover, like a gamma squeeze. Like, we don't really cover that very often. Sleepy mode, which is what the stock market's in right now, we don't really cover that too often. So I hope you guys get a tremendous amount of value out of today's video. All I ask in return is that you smash that thumbs up button, and that is literally it. And leave me a comment on what your opinion is. If you're making any moves in the market, leave me a comment down there. I'd love to hear from you guys. As always, if you're looking to apply for the private stock group, the private Discord chat, Financial Fortress, coaching, anything like that, check out the pinned comment down there, the main pinned comment, and the second pinned comment down there will be for our value email list. If you want to join that, it's absolutely free to do so, okay? So, where I want to start out here, looking at this chart here, if you're wondering what the heck are we looking at here, we're looking at the VIX, okay? This is the volatility index, all right? And this basically shows you kind of like how crazy the market is at a given time, okay? And the VIX is going to be super high, usually in a crashing market or a market where you're just getting massive fluctuations and shares are just being traded across the board like crazy. Usually that's when VIX is going to peak up, right? And you just got a ton of volatility going in the market. Now, when obviously there's less action in the market, right? Volatility starts to slow down. And if we look at the past, let's say 14 months or so, okay? We've been on this ride to sleepy land essentially, right? Where right here, picture the market is on like, I don't know, it drank like 4 Monster Energies in a row and its heart's beating out of its chest and it feels like it's about to have a heart attack, right? And that's essentially where the market was about 14 months ago. And slowly but surely, this market has slowly come back to life, right? And it had a couple cups of coffee here, and then a couple cups of coffee here, and then a little espresso here, and then it kind of balanced back out, and then it had a few Red Bulls here, and then all of a sudden, now today, we are there. And so what should you view when you view this chart? This chart should essentially tell you that the market has gone to sleep. That is literally what has happened. The stock market has gone to sleep. And this is why you're not seeing any of those 3% days in indexes. It's like, I don't even remember when the last time we had a 3% day was, right? Back in this time, it was like 3, 4, 5%. The indexes were moving up, down, all around like crazy, right? And recently, it's rare to even see a 1 or 2% day for the S&P 500 recently, right? It's just been, the stock market is asleep right now, just, point blank. If we look at this here, okay, this is a 5-year chart of VIX, okay, the volatility index. And you see, we're at levels recently that, we haven't really seen since, you got to go back to like 2019 time, right? VIX is just down there right now. There's just not a lot of movement in general in the market. And I mean, especially if you come off this period of just insanity, right? To be where you're at now, this has kind of created a sleepy market for the most part right now. And some people, when they see a sleepy market, it makes them sleepy, okay? And they're like, man, there's no stocks really moving right now, or there's not enough action. And they start looking for where's the action, right? Where's the action at, man? Because this market is just in a place right now where it's just chilling, man. It's just chilling asleep, right? And the stock market it can be very similar to a baby, right? A baby loves to sleep, right? Now, when a baby goes to sleep, you don't know how long that baby's going to be asleep for. Could be asleep for 30 minutes, could be asleep for an hour, could be asleep for 2 hours, 3 hours. You don't really know. It's in nappy mode, right? And it looks so peaceful, and that's the stock market right now. It's asleep. But what you don't know when the baby's going to wake up, right? And when that baby wakes up, guess what happens? That baby's going to wake up either super cranky, in a super bad mood, or that baby's going to wake up smiling and so happy. And you don't know what's going to happen. You don't know when the baby's going to wake up. You just know that baby's going to wake up, and you don't know whether it's going to be in a great mood or just a horrible mood where you're like, oh my gosh, what is going on with this baby? This baby is mad right now, okay? And that's the stock market right now. The stock market is this little sleeping baby that we know is going to wake up. We just don't know for sure which way it's going to wake up, in a good mood or a bad mood. Let's talk about gamma squeeze, okay? The gamma squeeze happens when the underlying stock price begins to go up very quickly within a short period of time. As more money flows into call options from investors, that forces more buying activity, which can lead to higher stock prices, right? Imagine, you're buying calls like crazy. You're buying calls like crazy, and people are writing new contracts, calls, right? And all of a sudden, it's coming to expiration, right? And those calls, they represent 100 underlying shares, right, in each contract. And so all of a sudden somebody buys a ton more shares because they bought a ton of call options, right? Somebody's going to end up buying that, right? You could sell it off. Like a lot of times I'll sell off my call options a day or two before they expire. So I actually don't have to purchase the underlying shares. I'll sell it to somebody else, right? But somebody at the end of the day is going to be purchasing those underlying shares, right? Especially if they're, in the plus, right? That's what you do. And so that can end up leading to a ton more people buying shares, and you get this whole, gamma squeeze situation, which is just like a firework going in the sky, right? And gamma squeezes are getting interesting in the market, right? So an obscure but increasingly influential dynamic in the options market may explain why U.S. equities have been so two-faced lately. As meme mania rages, companies such as AMC are whipsawing traders like never before, okay? I wouldn't say never before. I mean, we've seen some stocks with some incredible volatility. I remember Volkswagen a long, long time ago. Volkswagen shares went crazy, okay? You go through these time periods where certain stocks just, they go up like ridiculous, right? And it's a weird situation. It's like a phenomenon in the stock market. And sometimes it doesn't even have the most exciting kind of underlying fundamentals with the company. And yet something happens where the stock just goes absolutely parabolic to the sky, right? Yet at index level, stocks are the most placid in years. The S&P 500 index posting its sleepiest stretch since 2017, okay, since 2017. To the likes of this strategist, Michael Purves, it's all about action in the derivatives, or in that case, the index or lack of action. Option dealers have been increasingly accused of moving stocks over the past year as they hedge their exposures. The thinking is that they've caused a phenomenon like gamma squeezes, right? In which a dealer buys a rising stock to balance their exposure to contracts they have sold, only to drive prices up and so to be forced into buying even more, right? And when you get this sort of gamma squeeze situation along with a potential short squeeze, it can make for some incredible rides upward on some stocks, right? Because you get the gamma squeeze and then you get potentially a short squeeze, right? Because in a short squeeze situation where stock's going up like crazy, right? Shorts are basically forced to cover shares, right? Some shorts won't put any limits on their short positions, right? But most shorts will put limits. So let's say a stock price, they say they shorted at $10 and it goes up to $12, they might have it in there that it automatically, buys back the shares and covers that short at $12. Now they might go ahead and re-short that position and decide to re-short it, right? That's their own decision. But a lot of times along the way up, right, you get shorts to cover. When a short covers, they have to buy back those underlying shares. Now they could also sell right back those underlying shares, right? But you have to buy it back, which creates this upward price action that is just insane for a given period of time. And some shorts can even go long for a certain period of time. So let's say you're short, XYZ stock, you short it at 10, it goes to 12, you cover your position, so you buy back those shares, right? And now you might say, well, it's got momentum, let me ride this out a little bit. So you might ride it out a little bit, try to get back some of your money you just lost in your short, right? And then you end up, whenever deciding to sell off those shares, right? And then maybe you even re-short the position, okay? And, that's trading activity. And so when you get gamma squeezes along with short squeezes, it creates these unbelievable situations where a stock can be tremendously volatile and make some ridiculous moves up, way unnatural moves up, right? I mean, a crazy move up for a stock is if that stock like doubles in the course of a year, right? Like that's huge. Sometimes with some of these stocks, they could double in a matter of a day, right? or go up, 400, 500, 600% in a matter of a few days, right? It's unsustainable over the long term, but in the short term, it can create some tremendously crazy situations, right? And that's definitely something we've seen recently, okay? Such squeezes have been blamed for wild moves, such as the tech stock rally of 2020 and the December 2018 crash. I don't know if any of you guys, how many of you guys were around back then, but that was one of the silliest stock market, I don't really want to call it a crash, but corrections I'd ever seen, okay? October, November, December, stocks were just falling all over the place. It didn't make any dang sense, okay? It felt like 2019 was going to be a pretty good year economically and just in the markets in general, and stocks were not at high valuations, and yet October, November, December, all these stocks were falling all over the place. Any of you guys that were in the market, you remember this time period. It was weird. Very, very strange time. It created some unbelievable buy the dip opportunities in the market, but it was super strange, man. The market was selling off like there was going to be some sort of massive recession, which there never was any sort of massive recession. It was a weird time in the market, and it wasn't like valuations were pushed up to the sky at that time. Such a strange time, okay? Lately, however, both options activity and pure play bets on volatility for the S&P 500 have drifted lower, okay? The reduction of index volatility positions might help explain why some of the index level market behavior this year has come without some of the violent, crazy whipsaws. Purvey's wrote in a weekend note, while there have been some abrupt moves, it doesn't have the feel that came with some of the index gamma squeezes, right? Which could drive larger swings up or down in the market, okay? And yeah, you're not seeing the market do anything in this situation. You're seeing very specific stocks make some incredible moves, right? And definitely around a lot of the meme stocks, the AMCs, the GameStops, BlackBerry, some of those. Like you look at a lot of that group, they've been making some crazy moves. And a lot of times, whenever one makes a move, and AMC is kind of the leader of the bunch right now, right? Whenever one makes this crazy move, the others make a crazy move as well, right? Sometimes it's not as outsized, but it's a huge move, right? If AMC is down, I don't know, let's say tomorrow AMC stock's down 25%, right? If AMC is down 25%, I would assume a GameStop will also be down, BlackBerry will also be down, and some of those other stocks people have been playing, right? In that whole bunch, right? However, let's say AMC's up a bunch tomorrow, I would probably assume that those stocks will be up as well, right? They're kind of following each other around right now, and you're getting those type of moves in these stocks, but you're not getting any real major action in the markets. You're not seeing, Apple going some crazy moves right now, or Amazon or Google or any of those type of stocks, okay? Their moves will come, I promise you that, but they're not right now, okay? That's very, very clear, and Amazon's been trading kind of in a $3,000 to $3,200 range, $3,250 for quite a while now. And you're like, man, Amazon's not really moving. Their numbers are amazing. The company's executing, but their stock's not really moving. It's in very specific stocks you're seeing some absolutely massive moves, right? And, to even a lesser extent, you look at something like TTCF, right? That hit $15 back in April. And, recently it's been trading all the way up to 23-ish, right? I mean, that's a pretty darn big move in a very short amount of time compared to something like an AMC. It's not much, right? But for the market in general, that's a massive, massive move in a short amount of time. You're like, what's going on with some of these stocks out there, okay? Open interest in puts and calls on the S&P 500 is near the lowest it's been since 2016. Very important line, okay? Open interest in puts and calls on the S&P 500 is near the lowest it's been since 2016, okay? That just shows you that, there's a lack of interest from doing option activity kind of in the market in general right now. Once again, this only lasts so long, but for right now, that's the way it is. What that tells me is that no one has any conviction, true conviction on where the market's headed next. If there's big conviction on where the market's headed next, whether it's down, you're going to see tons of buyings of puts, right? Whether it's there's going to be a huge move upward in the market, there's going to be tons of calls bought. And I think what's confusing people is the fact that we had a super rapid rise in the markets, right, to near all-time highs, right? Then you compound that with this feeling of the economy coming back, but we're not sure like how strong it's going to come back. And you compound that with a lack of stimulus money potentially being pumped out there now, right? And so you create this whole dynamic where people are just unsure. They don't think the market's going to go down big, but a lot of folks don't feel the market's going to go up big right now. And so if you aren't feeling that, why are you going to do anything unless you're truly trying to hedge a position? So let's say you're long, $100 million of Tesla stock. Maybe you buy some puts to hedge your position just in case Tesla was to go down to $300 or $400 or something like that, right? You make some money on the move downward, and then if you want to buy more shares of Tesla, you obviously can with the profits you made off that, right? So unless you're hedging, it really doesn't, for a lot of folks, it doesn't make sense to buy any puts or calls in the market because people just are like, I don't know where this market's headed, man. They're really confused right now, okay? A similar story for the SPDR S&P 500 ETF Trust, or the SPY, okay? That means some of the fuel for the dealer hedging trades at index level have disappeared. CBOE, Volatility Index Futures activity, has also yet to recover to Rona levels. Another one important there. The CBOE Volatility Index Futures activity has yet to recover to Rona levels there. Meanwhile, derivative bets are booming again in single name stocks like AMC as retail investors pile in. Trades involving 10 contracts or fewer are rising as a percentage of overall equity call volume. Now, keep in mind, when most calls expire worthless, okay? The high majority of call options expire worthless. Something very important to keep in mind. Most of the time, the people that make money when it comes to options are the folks that write contracts, okay? Now, the people that you hear these stories of, they made hundreds of percent, thousands of percent, or tens of thousands of percent in a very short amount of time are the people that end up buying calls, right? And if something goes their way, right, they make some crazy money. Like imagine you start loading up on call options in AMC about a month ago, right? You start loading up on call options, like, oh my gosh, you've made tens of thousands, hundreds of thousands, or even millions of dollars, right? Like you are looking unbelievably great, right? But keep in mind, like usually when folks start piling in, the stock's already made its huge move, and then they're piling in for another huge move, hoping there's another huge move. Sometimes it happens, and sometimes it doesn't happen, and the majority end up losing money, unfortunately, okay? And so that's kind of what happens in the stock market. It's just like, as soon as it's out there in the mainstream media and everybody feels like everybody's talking about it, usually that means you're getting close to the end in that situation, okay? And so yeah, that's going on in the market, okay? Now, obviously, AMC's been just tremendously volatile. I mean, you look at the stock just over the past, 5 days. Tuesday, it's trading at 29. Then it's up to 72, 62. Then it's back in the 40s. Then it's at 65 or so. Then it's back, in the 40s again. And today, it hit a high of almost 60. It's been trading at 54. That stock, I wouldn't be surprised if that stock, is $50 at the end of the day or $60 at the end of the day. Like, no one's really telling you where that stock's going in the short term. All we know is it's dang volatile. You have short squeezes. You have gamma squeezes. You have the crazy amount of attention, and it's just that everybody's been talking about it. It's just pure pandemonium at this point, right? But when it comes to volatility, there's something very important to understand, okay? People get scared around volatility. They hear, oh my gosh, the market could get crazy, the market's going to be crazy, blah, 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 and they start getting scared. The truth is, I love volatility. You should love volatility. Volatility in the market is when the most money is up for grabs to make in the market, okay? And even coming from an investor perspective, okay? I'm not even talking from a day trader perspective. Day traders, a lot of those would probably feel they love volatility too, okay? I'm speaking from a long-term investment standpoint of me buying companies for the next 3, 5, 7 years, okay? I love big volatility because when there's times of big volatility and the market's in a correction, a crash, something like that, the market's going crazy, that essentially means there's opportunities for me to buy some shares in some stocks I love for very, very cheap, right? And I have a lot of examples of stocks I've been able to take advantage of, right? Tesla, Maestro. I'm going to take you guys through some real numbers here, okay? Some nitty gritty we're going to look at, okay? If we look at Tesla, right? Here's a public account. I have 750 shares of Tesla, right? When I started buying that stock, it was literally the worst price I had bought, right? I bought 135 shares at $54.59. Now, this is obviously on a split adjusted basis now, right? And that was the worst price I got. Tesla was crazy volatile in 2019 and saw some tremendous dips in that stock that I took advantage of, right? Here, 43.91, 85 shares. Here, 145 shares, 39.37, right? Here, 75 shares, 37.70, right? 85 shares here, 44.65. For somebody like myself that loves to load up on shares over months or maybe even over a year or so in a stock, right? I love volatility. Volatility means that I am going to make more money over the long term because I'm likely getting those shares for cheaper price than I ever expected to. And so it's a beautiful, beautiful thing for me. I never fear that, right? I like literally, if you told me, oh, Jeremy, the market's going to crash 20% tomorrow, okay? Sweet. Awesome. I'm buying more shares for cheaper, right? Because I always make sure I keep some cash on the sideline. So in case we get a correction, a crash, whatever in the market, I'm always in a position of power rather than a position of weakness. The only way you're ever in a position of weakness in the market is if you literally have no money ever around because you're always like, if the market crashes tomorrow, if there's a correction, I have nothing to buy with. That's not a good feeling at all, right? If we look at this, okay, Facebook's a great example of a stock. This is 371 shares I own in the public account here, okay? And these are all my different lots, that prices I bought at, right? And once again, the worst shares I ever bought was actually that first batch of shares, 174.42. Now, remember I talked about in 2018, we had a crazy correction in the market. It was violent, man. October, November into December, the market was dropping, and people were like, "What is going on? Is it something the Fed's doing?" And it was just a messy market in the short term, right? And I was able to load up on some great prices for Facebook stock, right? I got 25 shares here at 159, 35 shares at 157, 17 shares there at 147, 15 shares there at 132, 21 shares there at 139, 77 shares there at 137, 15 shares at 126, another 16 shares at 131. And so as the stock fell and fell and fell, I just continued to buy shares in it. And obviously, the gains on that stock are obviously in a stock like Facebook, I basically took almost no risk in that stock. Like what's the risk in Facebook stock? Like everybody stops using Facebook and Instagram and WhatsApp in 2019, 2020? No, that's not going to happen. Like it was almost a no risk proposition. And I was able to make, 100% plus on my money and, tens of thousands of dollars. So as of right now, we're up on that position total $67,000. So the price I started getting in was a good price, right? But I just got much better prices over time as the market dipped. That volatility, I took advantage of that. I didn't let that pass me by and say, oh, I'm scared, the market's going down. No, that's not what you do, okay? Skyworks Solutions, exact same situation, okay? I started buying here, 95. As the stock started to fall in the fall time, right? In 2018, I bought more shares, $76, $72, $69, 150 shares here at $67, $66, and here at the lows, $61.12. I got 40 shares there on January 3rd, okay? And so as that stock was just in a very weak state, I was buying and buying and buying those shares and loading up, right? And so this is where you want to take advantage. I try to zoom out as far as I could for Tattoo Chef, but I bought so many dang shares, and this is my main private account. It's ridiculous, right? And as the stock went down and down and down, I continue to buy. As of right now in Tattoo Chef, we're up $181,000. I think that's child's play from what will be up long term on that stock. I believe in 5 years it's going to be $1 million plus stock for me as far as profit made. Not talking about account size. I'm talking about profit. I believe I'll be up 7 figures plus in this stock. Just in this account alone, never mind with my other accounts, okay? But as the stock continued to weaken and weaken and weaken, I bought more and I bought more and I bought more and more and more shares in the stock as it continued to weaken, okay? And I took advantage of those dips. And so this is why I never, ever fear volatility. As somebody that's, looking at the fundamentals of the company, looking at the valuation, the financials, the management team, if I'm getting those things right and that stock goes lower and there's a bunch of volatility, sweet for me. That just means I make more money in the end. That's literally, if the market goes down 20%, all that means is I make more money long term. That's literally all it means. If Tattoo Chef is trading at $15, all that means is I make more money. If the Tattoo Chef's trading at 21, all that means is I make more money, right? If Tattoo Chef's trading at 60, that means there's less money I will make long term, right? Because I'm not getting to buy for cheaper prices, right? So that's the way I view it, and that's really the way anybody that's a longer term investor in this market should really view it. Do not fear volatility. Volatility is where the real money's made. Just you look at what happened in the 2020 mess there. market bottoms in March, right? Starts to come back April, May, June. I mean, as long as you bought almost any stock in May, June, July, August, you're probably made, 20%, 50%, 100% plus on those shares, right? So never fear volatility. All it is drama in the short term, and all it means for you, if you're picking great companies, right, for cheap prices, all it means is you're going to make more money. Now, if you're getting into some stocks that have some ridiculous valuations that the fundamentals don't make sense, it's a whole different story there. But as long as you're getting into stocks that the fundamentals are beautiful, the financials are beautiful, and the company has a management team that has their head on straight, and the valuation looks good, man, then it's just like, at the end of the day, it's just like me. I'm just shooting wide open 3-pointers, and I'm Mr. Curry. Okay. So anyways, hope you guys enjoyed this. As always, if you want to check out the private stock group, you're looking to level up your investing, whether you're a new investor, you're an experienced investor who's looking to take your game to the next level, check out our private group. There'll be main pinned comment down there. Much love as always, guys. Don't forget to smash, and peace.